All right, good evening, everybody. Testing 1, 2, 3. Good morning, good afternoon, good evening. Type a 3 in the chat if you can hear me. I'm going to do some adjustments here on my computer monitor, and I'll be right back. Testing 1, 2, 3. All right, thank you, James and Robert, Noel, Elliot. All right, guys and gals, we'll be back in about 30 to 40 seconds. Go ahead and get comfortable, grab something to drink, get relaxed, and we'll be back in about 30 seconds. All right, folks, I am back. Everybody ready to get started? Let's do another quick audio check here. I've made some adjustments. Also, can you see my screen? You should see a slide. Mechanical done for you strategy, any market, any time frame. Do me a favor and let me know if you don't mind that you can see the slides and also hear me. If I get some confirmations, we'll go ahead and get this rolling. All right, excellent. Hope everybody's doing well today. My name is Silas Peters. I'm the founder and head trader of Seasonal Swing Trade. I appreciate everybody taking time out of your day to attend this presentation. If you are, or if you register for Mechanical Done For You Strategy, any market, any time frame, you are in the right place. This is literally probably my favorite topic to present on. If you follow me or see anything else, I don't really have too many topics because I don't need dozens and dozens of strategies or topics to speak about. This is actually my bread and butter strategy. So I'm really excited to share this with you. It's fun. Encourage you to stick around towards the end. We'll look at some live markets. We'll take your symbols, your tickers, and all that good stuff. Ask all the questions you want during the presentation. I'll be looking at them, try to answer as I can. Otherwise, we'll save the majority of those to the end of the presentation so you can make sure we get through the meat and you can get your strategy. So let's go ahead and get started here. We first must always start with our risk disclaimer as required by the regulatory governing bodies, as well as our attorneys. Past performance is not necessarily indicative of future results or substantial risk of loss associated with trading. Only risk capital should be used to trade. You can lose money in trading. So while everybody is becoming familiar with the risk disclaimer, why don't you do me a favor and tell me where you are in the world? Where's everybody attending from in this Corona conundrum? Craig says no audio. Everybody else says audio is good. So let me you were telling me where you're from, so audio must be good. Let me respond to Mr. Craig here. All right, so we've got Phoenix, Arizona, Montreal, Montana. Good audio in St. Louis, Trinidad, Southern Caribbean. Nice, Noel, sorry. Oak Ridge, Texas, Boynton Beach, Southern Cal. Cool. Wow, UK, welcome. Arizona, Virgin Islands, nice. Quebec, Minnesota, London. All right, cool. People literally from all over the world. South Africa, welcome. I am in LA, Lower Alabama, here on the Gulf Coast in South Alabama, and I want to be respectful of everybody's time here, so I don't know what time it is in some of these parts of the world, whether it's midnight or early in the morning. So let's go ahead and get started. I want to make sure you leave with a solid strategy. All right, Craig, log out, log back in. We'll see you in a few minutes. All right, let's go ahead and get started. I'm going to introduce myself once again. My name is Silas Peters. I'm the founder and head trader of Seasonal Swing Trader, and this is me with my family here, standing in front of my two girls here, standing in front of my alma mater here at the University of Alabama. Here's some pics of us trying to weather the corona conundrum, weather this quarantine here, doing the homeschooling bit and all of that. We enjoy going down to the bay, doing kayaking, boating, all that fun stuff. And of course, they made some masks there, although they haven't made me a mask. But so 3 days after I graduated from University of Alabama, I sold my car, packed up my small belongings, and I drove north. I headed straight north to Chicago, the great windy city. And it's here where I cut my teeth in the commodity markets working at the Chicago Board of Trade. So here where I was bitten by the trading bug and never really looked back. So while here, I helped run a global trading desk, placing and managing books of trades across the Americas, Asian, and European sessions, primarily working with large block order flow for hedge funds, banks, CTAs, large force spec traders, and the like. I've also been a part of building and managing multiple futures and equity brokerage firms, managing operations, trading, back office sales, and support. Also worked as a private family office investment consultant. I hold or have held these various futures and securities licenses. And then in 2016, I launched Seasonal Swing Trader. But let's talk about my journey some more. It wasn't always easy. In fact, there was a learning curve, several obstacles and hurdles on the path to where I am today. The first step was obviously learning. School cannot teach real life experiences in the markets. I'm sure most of us can attest to that. In the beginning, I made some money. In fact, I made a substantial amount of money. Was I lucky? I don't like to think that I was, but ignorance and greed cost me my profits. I blew up an account, then I blew up some other accounts in what I like to call revenge trading. So can anybody attest to that? Who has blown up some accounts and has tried to get back at the market with so-called revenge trading? Absolutely, yeah. So finally, I went back to my roots, settled down, worked my process, and found consistency. So enough about me. Let's talk about you. Does your trading desk look like this? Does anybody's trading desk look like this? This is not my trading desk. Certainly not the case. This is a poor joke. Found this on the internet. Thought it was funny at the time because I feel like it's what most of the people outside of the trading world view us as traders, think that this is what we do. We sit in a basement all day looking at all kinds of monitors and blinking widgets and lines crossing, zigzags, this and that. Not the case. Now, this did look like my trading desk in Chicago for obvious reasons, but now I've been able to pare back to just a handful of monitors for charts, quotes, trading platform, and then internet for day-to-day operations. But the point is that we do not need this. We're going to keep things simple today. All this does is lead to paralysis analysis. And that leads us to our next slide. So who here is a victim or has been a victim of paralysis analysis? I'm raising my digital hand. I've been a victim. Per Wikipedia, it's a state of overanalyzing or overthinking situations so that a decision or action is never taken, in effect paralyzing the outcome. So who here? A lot of people has been there, done that, got the t-shirt, and I could promise you we are here to eliminate. So I'm sure everybody at some point has been a victim. If you haven't, you are one of the very fortunate few. We've done our analysis. We've looked at multiple time frames. We said this indicator is doing this. And then we go to execute our trade, and then all of a sudden something pops up which contradicts our overall bias. So we're here to keep things simple and not create something complicated. So what do you trade? Appreciate everybody's interaction so far. Let me know what you trade. You trade stocks, options, futures, forex, cryptocurrency, any or all the above. Like to see who I'm talking to here. I trade all the above: stocks, options, futures, and forex on an active basis. Do not trade crypto on an active basis. I do have so-called investments or accounts across the internet in cryptocurrency. Don't even know where half of them are, or even how to get into half of them. I view it more as a lottery ticket, to be honest with you. I do watch a few of them to see what they're doing, but I do trade all these on an active basis. So we've got mostly stocks and options traders in here, forex and stocks, options, stocks, all the above. You've got a cryptocurrency trader, interesting. That market noise, yeah, options trader. All right, Craig, you can hear us now, I think. Can you hear us now, Craig? Looks like you can. Let's see, futures and forex. futures only. Cool. So pretty big variation here. That's great. Like to see that because it's good news. What I'm about to share with you today is highly accurate. It's profitable, works in all markets, as we just talked about, all time frames, and it's 99% mechanical. And most importantly, it's simple. Again, I'm going to just hammer home the fact we're not here to teach rocket surgery. This strategy is not rocket surgery. So my agenda promise to you today is we're going to learn a simple mechanical setup that is repeatable regardless of the market or time frame. So at some point during the presentation, I'm going to ask you, have I fulfilled my promise? And I hope to see a lot of yeses. Speaking of promises, if you're here today, you may have read or seen something about the $10,000 trade promise. First and foremost, full disclaimer, I'm not going to promise you anything in trading, not going to promise you anything in life, but these were trades that we talked about in multiple free presentations such as this self. In fact, we talked about 3 markets in particular: crude oil, RBOB unlead gas, and natural gas. You don't see natural gas. This is crude and RBOB unlead. And they went on, or we talked about a very particular setup that was in the making for potential $10,000 per contract move, and they went on and met those objectives and then some. Excuse me. We also talked about these so-called sleeper markets and coffee and orange juice. You can see here from a 5, 15, and 30-year historical price perspective that the markets tended to bottom out at this time of the year. Does that mean that we went and bought these markets? We got long, we bought call options? Absolutely not. We talked about waiting patiently for a very specific setup that you're going to learn here momentarily, as well as what happens from a historical basis, and we were looking for a projected move. They went on and triggered and met their $5,000, $6,000, $7,000 per contract price objective. We also talked about markets in the grains: corn, soybeans, and wheat. These here being corn and soybeans. You can see here from a 5, 15, and 30-year historical price perspective that they tended to bottom out and get quiet at this time of the year. That's precisely what was happening. They were getting very quiet out in the Midwest. Markets, the participants were being lulled to sleep by favorable weather and more. We said, be patient, wait, don't go long, wait for this particular pattern to set up. That's exactly what happened. They went on, met $6,000, $7,000, $8,000 per contract price objective. So this presentation is not all about futures, not all about commodities, works in all markets, as we've already said. Just making a point that these were markets or setups that appear time and time again. We talked about them in multiple free presentations. So who here is ready to see the setup responsible for these recent trades? These are recent trades that anybody could have taken. Once you learn the strategy I'm going to teach you, we're talking about the E-mini S&P, 2 trades there that equated to 750 points. Cocoa right there in the middle for 160 points. The Aussie New Zealand dollar beneath the cocoa chart for 100 or 300 pips. And then Facebook over there on the right, 2 trades, a short and a long, good for about $20 a piece. All right, so everybody says, yep, quit screwing around, let's get to it. It is, drum roll please, the 1, 2, 3 pattern, also referred to as the 1, 2, 3 top or 1, 2, 3 bottom. So who here is familiar with the 1, 2, 3 pattern? I would suspect 99.8% of you are. I didn't invent it. It's been around for years, decades, hundreds of years. It's one of the most fundamental technical patterns in the textbooks, Technical Analysis 101, but highly, and I mean highly, overlooked by most traders. So yep, somebody says yes, definitely, absolutely, familiar, not really. It's good. We're going to learn about it. So let's talk about the setup. Setup is price action based. The pattern is comprised of a low and a higher high and a higher low and a break of that higher high. In the case that we're going long, pattern is inverse is short. Anticipates a change in trend from up to down on a break below the 2 or B point, or anticipates a change in trend from down to up on a break above the 2 or B point. Generally speaking, the more bars it takes to complete the pattern, the bigger the move. Let's talk about the strategy. Usually occurs at the end of trends and swings, can be an indication of a change in trend, can also be found within a trading range. So you may argue, is this a reversal strategy or a counter trend type strategy? And in essence it is, but we're going to talk about ways later on how we filter these trades to even increase our probabilities of an already high probability trade. I will stress that it also works extremely well when the pattern sets up at important or significant areas of support and resistance, head and shoulders, tops and bottoms, double tops and bottoms, and so forth. Let's look at the basic mechanics. Let's look at the 1, 2, 3 top strategy. Doesn't matter. This could be Apple stock, Coca-Cola, Bitcoin, pot. It doesn't really matter what market this is or time frame. We're learning the basic mechanics. So point one here, as you can see, is the highest peak when we find resistance and then move back down. So as the market moves down, finds the lowest point or support and bounces off that support, we get a number 2. Market retraces higher once we stop making these lower highs and retrace back down. That gives us our number 3. So we have a 1, 2, 3. The market could have traded as high as here, up here, or even up here, as long as we don't take out the number 1 point. We have a valid 1, 2, 3. Now for a 1, 2, 3 top, we're looking to get short on breaks or closes below the number 2. 1, 2, 3 bottom, as you would suspect, the same setup, same rules apply, but only in inverse. So the market has hammered down here, found a number 1 low at the support, trades higher, and then pulls back down, giving us a 1, 2, 3. Again, the market could have traded as low as here, as low as here. As long as we don't take out the number 1 low, we have a 1, 2, 3 bottom. Now we know that for 1, 2, 3 bottoms, we're looking to get long on breaks or closers above the number 2. So let's look at some chart examples. Start off here with the top. This is a daily chart of the Australian dollar, the 6A. If you don't trade futures, you could look at the ETF FXA. If you don't trade futures or ETFs, you could look at the Aussie US dollar in Forex. You're going to see the exact same pattern. So on this example, the next couple of examples, we're going to be looking really at daily charts. So on a daily chart, what we primarily prefer to do is look for 52-week highs or 52-week lows. That's not an absolute rule, set in stone rule. Those are going to give you your highest probabilities. We'll talk about later about how to dial that back in tighter. So if you want to see every, say, 6-month highs or 6-month lows to find more trade ideas, you can do that as well. So here we are in the 6A, the Australian dollar. We have a number 1 point. Why? Because this is a 52-week high. So you see here the market trades down. Once we stop making these lows and pull up, we get an established number 2. Now we only retrace higher by about 4 bars here, 4 or 5 bars before we pull back down. So we have a 1, 2, 3 top. Again, the market could trade up here, as long as we don't take out the number 1 high, we have a 1, 2, 3. Now what? We know that we're looking to get short on breaks or closes above the number 2, which is exactly what happens. Now you say, that's great, Silas. I already know the rules. I know where to get in. But what about the important stuff? What about the rest of the recipe? Well, where do I put my risk? Where do I put my targets? Very good questions. Our risk, our initial risk, must be placed above the high of the number 1. So up here, our initial target is the distance between the high of the 1 and the low of the 2 measured down. So we measure from here to here and then down from here, which in this example is about $2,200 or 225 ticks in this example. So off the onset, it is a 1-to-1 risk reward ratio. We have our risk up here, we measure from here to here, and our target's down here. We're going to talk about ways later how you can quickly adjust your risk depending on how you manage your risk or how you trail your stops. They come a dime a dozen, so it's ultimately up to you. But the most logical thing is to trail it at next areas of significant areas of resistance or support for a long. So here, as you can see, we start breaking down. We can quickly move our risk or cut our risk by 50, if not 60 or 70% or greater. So look at another 1, 2, 3 top pattern. This is a daily chart of Walmart WMT. We have a number 1 point here because it's a 52-week high. Market trades down, pulls back up. Give us a 1, 2, 3. We know days in advance what most traders struggle with. Where am I going to get in? If I get in, where am I putting my stop? Where am I taking profits? Where is my target? We know that well in advance. We have a 1, 2, 3. We know days in advance that we're looking to get short on breaks or closes below the number 2 low. We know our initial risk is above this number 1 point here, and we know our target is the distance between the 1 and the 2 measured down, which is about $5 in this example. Let's look at the 1, 2, 3 bottom example. So 15-minute chart of the E-mini S&P. Now it's going to be a little bit different here on an intraday chart. Obviously, we're not looking for 52-week highs or 52-week lows on an intraday chart. We're looking for what we call session lows or session highs. So the way I define a session low or session high is I'm going back to the Globex session. So if you're not familiar with futures or Forex, we're going back to the Globex session, which opens at 5 p.m. Central on Sunday afternoons, trades into the Asian session, into the European session, into the New York session, closes down around 4 p.m. Central for about an hour every day, reopens, rinse and repeat the cycle through Friday afternoon. So whenever you start your trading day, you're looking for new session highs or new session lows from that point forward. I start my trading day around 6 a.m. Central, so I'm looking for new highs or new lows from then on throughout the rest of the day. So here we have a session low as indicated by the number 1 low. Market trades higher, pulls back, so 1, 2, 3. Aggressive traders would get long on breaks above the number 2. So they're working a buy stop, a tick or two above this number 2 high. You're triggered into the trade. A couple of entry methods that I prefer that could be considered maybe more conservative, depending how you trade, is to either A, wait for the market to break up out and come back and retest, or 2, wait for the market to come back and hook through the number 2 point. So with that entry method, 1 or 2 things are going to happen. One, it's going to keep you out of potentially winning trades. Sometimes we'll break out above the number 2, we'll zip up, meet profit target, you missed the trade. Don't worry about it. There's plenty of other markets and plenty of other time frames to look at. What is it also going to do? It may keep you out of winning trades. What is the other thing it can do? It's likely to keep you out of losing trades. Sometimes we'll bust up and then we'll roll back down and you get stopped out. So I like to wait for the market to bust up and then hook back up and through, getting you into the trade. Let's look at a 1, 2, 3 bottom on Apple. Hell of a way to catch some longer term position type moves. See here on Apple weekly chart, we have a 1, 2, 3. We also have a double bottom, another high probability technical pattern. We break above the number 2 here on this large bullish candle. We trade sideways for a few weeks. What happens then? The market comes back down, retests, and hooks back above. That's our signal to get long Apple. How do we do that? We buy Apple stock, we buy call options, call spreads, sell out of money, put spreads, whatever your flavor or style of trading is. Now let's look at some failed trades. They don't all work. Hate to bust your bubble. There is no holy grail in trading or in life. I know we're all big boys and girls. You already know that. But this is a 5-minute chart of the E-mini S&P. I probably took this in my live account. You can see here, market trades higher, large vertical uptrend. We break that trend line. We have a new session high, 1, 2, 3. Aggressive traders here are getting short on breaks or closes below the number 2. Or if you wait for the alternative method, market comes up, hooks back down, and you're getting short here. Looks like you're up by maybe a point or 2. I don't know how many ticks that is. If you didn't do anything, you're stopped out here above the number 1 high. Or if you exercise any type of risk management, you're stopped out here by, cut your risk in 50%, by 50%, you're stopped out here above the high of the number 3. Now, what happens here? Notice this. Has anybody caught this? We have a new number 1. Why? It's a new session high. This high is greater than that. So we have a 1, 2, 3. Market breaks down below the number 2 here, gives you a couple retests, and then ends up being a profitable trade. Let's look at what I call the no trigger trade or the voided trade. This is neither good, bad, nor ugly. It is what it is. It's just a no trigger trade. So, and I'm going to tell you why I like these here in a second. So here we have a number 1 point, number 2, number 3, 1, 2, 3. We know we're looking to get long on breaks above the number 2. What happens? Market trades lower, takes out the number 1 low. No problem. We start the count over. 1, 2, 3. Looking at long on breaks above the number 2. Whoops, the market trades lower, takes out the number 1. We start the count over. 1, 2, 3. We're looking to get long on breaks above the number 2. We finally are able to get triggered into that last long trade. Now, let me tell you why I like this when this happens. What's likely happening? Anybody that answers correctly gets a gold star on their crown. What's likely happening? So we're making new lows, new lows, new lows. So as we're making these lows on price action, what is likely happening? We're having some type of divergence in most cases. And we'll look at some examples here in a little bit. So whatever your favorite divergence is, whether it's RSI, MACD, stochastics. We're making new low prints, new low, new low, new low, but we're likely making higher lows, or i.e. no lower lows on your favorite momentum oscillator. Does that make sense to everybody? So we're going boom, 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 or we're going boom, 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 ticking higher on your RSI. That's what we call divergence, and that is just adding another filter or confirmation in your trade. All right, 1, 2, 3 pattern trade management. Confirmation of entry again, it's on a break above the 2 or B point for a long, or a break below the number 2 or B point for a short. Exit strategies. If you're only able to trade one contract, one futures contract, one option contract, one Forex pair, maybe one share of stock, I would say go or use the distance between the number 1 and number 2 points. Uncanny, more often than not, market's going to go tag that and then often reverse. It often reverses at that level. Now, if you get to the ability to trade multiple contracts, which is where we all want to be, have that flexibility to scale in and out, is take a third, a half, 2/3 off at that distance between the 1 and 2, and then trail your stop based on whatever works for your situation. That's what we were talking about earlier. I like to target good old-fashioned support and resistance levels, past price structure, using trend line analysis, but there's moving average trail stops, par SAR, 2 to 3 bar candles. Again, you have to figure out what works best for your situation. So I've showed you that this setup works on any market, whether you trade pips in Forex, Pepsi stock, pot, either potash or pot stocks, pork bellies, or the Polish zloty, and also on any time frame, whether it's a tick, 15-minute, hourly, 4-hour, daily, so on, and on any trading style. Whether you're a position trader, scalper, swing trader, day trader, why don't you do me a favor and type in the chat, what is your trading style? What is everybody's trading style? So we've got swing, day and swing, a lot of swingers in here. Day, weekly options, scalp and swing, trend. Cool. Scalping's probably the toughest. Point is that you've got to find out what your bread and butter is. I found for me, I like the 5-minute on the S&P, the NASDAQ, crude oil futures, and currency futures. Also enjoy swing trading currency futures, the 6As, the pound, Aussie pound, Canada, euro, yen, Swissy on a 4-hour, trend really well. And then daily, of course, for my longer term swing positions. That's where I got started in my trading journey, is looking at end of day charts when I got home at night or early in the morning. Then I'd report to the workplace. This was long before we were looking at our smartphones in the cubicles. Didn't have any idea what was going on. Only could check when I got home. It's probably the best thing that could happen to me. So you've seen the proof. Let's look at some real trade examples. Not to say that what we just looked at were fake examples, but let's look at some real examples we've used in some of our services. We'll start here with crude oil. Everybody's familiar with crude. This is CL. If you want to follow along with USO or some other type of energy ETF or stock, you can certainly do that. You're going to see the exact same pattern. And boy, crude oil, ooh, getting obliterated, isn't it? So here we are, daily chart of crude oil, and I'm going to work my way from left to right, and you guys and gals can read the text on the right. So here we are with our first example. We have a number 1 point here. Why? It's a 52-week high. We have a 1, 2, 3. We know in advance where our entry is, where our target is, and where our stops are. Risk is above the high of the number 1. Target is the distance between the 1 and 2. So if we get short on breaks, closes below the number 2, quickly meets our $3 or $3,000 per contract price objective. Then it goes into sideways range-bound mode. Somebody called me out one time and said, well, you missed this. Didn't you trade that? No, I didn't. I don't really trade range-bound 1, 2, 3s. If that's your forte and that's what you want to do, by all means, help yourself. There's a good opportunity. That's a very nice 1, 2, 3 bottom, 1, 2, 3 bottom, triggers above, goes on and meets some nice profit objectives. I'm only looking for new 52-week highs or new 52-week lows on this daily chart. So here we get a new number 1 point. This high is higher than that high, hence we get a new 1, 2, 3 top. Breaks below the number 2. You get 4 days of retest there, giving you multiple opportunities to get short. And let me tell you why I like this trade, why I got excited about this trade. One, because we have the 1, 2, 3 top, which we've already identified as a high probability pattern. Secondly, from a seasonal perspective, we are at a time of the year where the markets tend to top out or go lower across crude oil, unleaded RBOB, nat gas, heating oil, and other energy related stocks. So when those two things come together, it's what I call the perfect marriage in trade. So we got short crude, we shorted crude futures, we bought put options, sold call spreads, traded USO, other energy related ETFs, quickly met our $4 profit objective, or $4,000 per contract, and then we trailed the stop. We trailed the market until we either got stopped out or we got a reversal. So here we're making new lows, get a potential number 1 low here, no, one potential 1, 2, 3 here. Let's talk about this example. 1, 2, 3, another potential setup where I got super excited. Why? Because of a 1, 2, 3 bottom. We also have my second favorite pattern, which is a triangle. We have a beautiful triangle setup here. And third, we're at a time of the year from a historical price perspective where the market tends to go higher. In fact, this is one of the best seasonal trades I have in my back pockets, getting long crude and energy markets at this time of the year. But what happened? Market broke down, sold off another $10,000 per contract, and we finally flushed down, got one last low here, 1, 2, 3. Market breaks above, and we're able to get long for a good $5 or $5,000 per contract move. So I want you to remember this chart and the subsequent charts, because I'm going to show you something special towards the end of the presentation. So look at another example here. This is gold, GC. Everybody loves to talk about gold. Everybody loves to speculate. Gold's going to go here, gold's going to go there. Who cares? Look at the charts, look at the price action, and let that dictate where it's likely heading. I could care less if it's going to $50 or $2,000. Here is GLD, the ETF that tracks gold. I primarily like to look at the futures market first because they're much more fluid. Because they're trading around the clock, 23.6. You're not going to see all these gaps. But if you want to start with the ETF, you're going to see the exact same setup. So here we have on the left, we have a 1, 2, 3. It breaks down and closes below the number 2. You get a couple of retests there, meets its $4 price objective. Here we trade lower, 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 find a new 1, 2, 3, also double bottom. We get a break above the number 2 here, gaps up, get a couple of small retests, meets its $2 profit objective, and then we go into consolidation or range bound mode. Here you go again. Well, what about this move in the middle? Isn't this a huge short opportunity? Yes, it is. If you're looking for range bound 1, 2, 3s, you certainly could have taken that. I'm looking for new highs or new lows, but here's a nice 1, 2, 3, beautiful move to the downside. So we start our new counts. We're starting to make new lows. These lows are lower than these lows. So new number 1, 1, 2, new 1, 1, 2, 3. Looking to get long above the number 2. What happens, if you can see that, we gap down, gets below this number 1, so we start the count over. 1, 2, 3. Gaps higher 2 days in a row, boom, boom, comes back down, retest, also get a trend line retest. That's our confirmation entry to get long gold futures, mini gold futures, GLD, call options, call spreads, or selling out of money put spreads. Let's look at Delta Airlines. This is probably getting redundant by now, but here are 4 examples in DAL. Delta, 1, 2, 3 bottom, zip up, comes back and retest, good for $4 and plus. 1, 2, 3 top, gaps down below the number 2. I don't like to trade the gaps. I like to see the retest here or the hook back down. Sometimes you don't get it, but I have members that will trade all of these aggressively. Here we get a 1, 2, 3, trades down below the number 2 aggressively here, get a small retest, and then it moves $8 plus, and then we get a last 1, 2, 3 bottom right here, 1, 2, 3. Trades above the number 2, trades sideways for a little bit, gets positive, comes back and retests, and then zips up $8 plus. And then for your Forex traders, here's a 4-hour chart of the CAD Swissy. So we have a new 1, 2, 3 bottom down here. 1, 2, 3. Also have a double bottom. Market trades up above the number 2. So the aggressive traders are getting long here on the break above the number 2. Or if you're waiting for the retest or the hook back above, you meet your 70 pip profit objective. And then here we start new counts. 1, 2, nope. 1, 2, nope. 1, 2, nope. 1, 2, nope. Finally get a 1, 2, 3 top here. Breaks below the number 2, goes down a little bit, retest, meets its 40 pip profit objective. I get asked all the time to work on intraday charts. Absolutely, of course it does. 5-minute chart of the mini NASDAQ. Here are some examples. We have a 1, 2, 3, breaks above the number 2, hooks back above, reaches 13-point profit objective. Here we have a new session high on a 5-minute chart. 1, 2, 3, breaks down below the number 2, trades sideways, gives us a little heartburn here, finally breaks down, reaches 20-point profit objective. And then we have one last traded session, 1, 2, 3, breaks above. If you're lucky enough to get long here on the retest by a tick, you're filled on your 30-point profit objective in about 2 bars. Now, with the invention of the micros last year by the CME, the micro S&P, micro NASDAQ, micro Russell, micro Dow, awesome opportunities here to trade the micros, to trade these markets, test them out, using multiple lots to scale in and out really without getting your face built. So why are you here? Why are you here? You're here to learn my mechanical number strategy for all markets and all time frames. Have I shown you enough proof? I'm going to take a swig of water here. I hope to see a lot of yeses when I come back. I'm going to pause for about 7 seconds and tell me if I fulfill my promise. All right, good. Everybody says yes, thank you. I actually had one person tell me no one time, and I was disappointed, but appreciate all honest feedback. So with that being said, but wait, there's more. What if the strategy was automated? What if the strategy was plotted onto your chart for you? What if the trigger entry and the targets were drawn for you? And what if your platform could scan the markets for you and tell you when there was a pending setup? I don't know about you, but I would think that would be pretty special. And it sounds like you agree. So you are in for a treat. Remember when I said, remember the examples or remember the charts? Remember the charts. These are the trade examples we just went over. I hope you remember them. It was just a couple minutes ago. Here is that same chart of crude oil. Same chart of crude oil. I know you're smart people, but let's talk about what all these arrows and these colors mean. So the green arrow is your number 1. Your red arrow is your number 2. The blue arrow is your number 3. 1, 2, 3. Pretty simple. Now, what is this white chevron, or this white stealth signal in the middle? This is pointing down, this is pointing up. These are not buy and sell signals. These are simply arrows or chevrons, whatever you want to call them, that are waving a hand at us, telling us, hey, we have broken or penetrated below the number 2 or broken above the number 2. It's just a visual aid saying we've broken below the 2 or above the 2, giving us a potential trade opportunity. So when that happens, so if and only if we break below the 2 or break above the number 2, we're gonna get these white chevron prints. And if and only if that happens, we're gonna get these 4 pretty lines put onto our chart. What are these 4 lines? So the blue line here is considered the breakout level, or could be an entry level. Your red line here is the red as your risk level or your stop. This lime green line is TP1 or take profit 1. And your dark green line is TP2 or profit objective 2. So remember, TP1 is the distance between the 1 high and the 2 low measured down. And the dark green line is simply 2 times TP1. Okay? Here is that chart of gold. 1, 2, 3, break above the number 2. We get our lines plot. It's TP1, it's TP2. We go sideways, we don't get these lines and these arrows right here because our settings are looking for new highs, for new lows. So coming down here, what are these green arrows? Actually, let's go back to crude. Why all these green arrows? New lows, new lows, new lows. It's telling us that we're making new lows. So we're making new lows. Once we finally stop making these lows and pull higher, we start to get 1, 2, 3s. So potential 1, 2, 3, potential 1, 2, 3. We never break above the number 2, so hence no chevron, hence no lines. So going back to the gold chart, we're clearly making new bottom down here, new lows. Here's that last 1, 2, 3. Market just peaks its head above the number 2, giving us our print. Goes higher 2 days in a row. I can guarantee you don't see that gap on futures chart. Comes back down, retest. Is TP1, TP2, and you see we're starting to make a new 1, 2, 3 high over here on the right-hand side of the chart. Here's Delta Airlines, DAL. Here's the long setup. Here's the short setup. Here's the short setup. Here's the long setup. Here's the 5-minute NASDAQ chart. Here we have a session high as indicated by the green arrow. 1, 2, 3. Market breaks down, hugs or hovers around the breakout level, hits TP1, hits TP2 to the tick. TP2 happened to be a new session low, so we get a new green arrow. 1, 2, 3. Market breaks above the number 2 here, hooks back above, hits TP1, almost hits TP2, but good enough for government work there. Should have had some profits for sure. Trades range bound, so that answers all you folks asking, well, does it work in a range bound market? Of course it does, because we're only looking for new highs or new lows. Here we get a new session low. This low is lower than that low. 1, 2, 3. Market just nips above the number 2, giving us our print. Market comes back higher, hooks back down, hits TP1. As we're looking for TP2, we're also making new session highs, so we're on alert to possibly reverse the trade. But what happens? We hit TP2. We finally get a session high here. 1, 2, 3. Market breaks below the number 2, hooks back down, hits TP1, TP2. Excuse me, and actually looking for a new 1, 2, 3 bottom down there. So is this training for you? Only you and you only can answer that. If you're new to the markets and want to jumpstart your success, if you're an experienced trader and want to add another arrow to your trading quiver, if you're tired of all the noise that we talked about, the indicator overload, the paralysis analysis, you just want to simplify your process, or if you need a specific step-by-step plan, a mechanical plan that you could even do part-time, this could be for you. So quickly, a story I like to tell is when I had this thing built out, I brought my wife down to my office, who's a ballet teacher, and I brought my 2 girls down who were like 4 and 5 at the time. And of course, they don't know a flying flip about the markets. So I showed them my charts. Of course, after they got all wowed and calmed down about the candles and the colors and this and that, I said, all right, let me tell you what I'm trying to do. I showed them, explained basically what I just showed you, and they got it. I actually understood. So my point is that if they can get it, you certainly can too. That's all you need to know, with a little dash of common sense, and this could probably work for you. So I do have a special offer for today's workshop attendees. I do limit this to the first 25. It's not some type of gimmick, because I do manage and monitor my own inbox support. I do have a team that works for me for support and things like that, but I do manage everything that comes in. I actually enjoy working with my students and members and getting the feedback and camaraderie, and we'll talk about some other cool things here in a little bit. So the offer for today is called the 3S Code High-Low Indicator Scanner. We built out the 3S Code indicator for the following platforms: Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. You're also going to get a chart pattern principle PDF manual trading guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support. Yes, we take care of you, don't want to throw you out to the wolves. And you're going to get access to our private Discord channel. So what the heck is the 3S Code High-Low Indicator Scanner, you may ask? Well, let me refresh your memory. This is what the 3S Code is. This is a 3S Code daily chart of CRE. See a short. You can see a short. You can see a long. Here's Bank of America. We have a long, and then a long. You see how nice, clean, easy, methodical setups here. Love, LUV. Here we have a short. It's TP1 to the tick. Here we have a short losing trade, bad trade. It stopped out here. We get another chance to go short one more time. And why do all the work when you can let technology do the work for you? So this is a screenshot of my thinkorswim platform where I'm running a scanner function, 1, 2, 3 top in the Russell 1000, only stocks that are optionable, $20 a share or greater. I hit the green scan button, voila, I get my results. And then here is a screenshot of some of my watch list. I have one monitor dedicated to watch list where I am scanning multiple markets across multiple time frames, and you can do the same. We've been looking at thinkorswim charts. This is what it looks like on TradeStation. Here we have a short, or here's the indicator rather, and here's our scanning component. Here's what it looks like on NT8. Here's your indicator component. Here's your scanning component. Here's what it looks like on TradingView, 4-hour chart of Apple. Here's what it looks like on TradingView. I love TradingView. Now, full disclaimer, there is no scanner for TradingView nor on MT4. So this is what it looks like on MT4. Here's a long on the 4-hour of the Euro Kiwi. There's a short, and there's a long. If anybody knows a Russian programmer that can make a scanner for MT4 or TradingView, let me know. We'll have it built out. But you do get the indicator for all platforms, the scanner only for TOS, TS, and NT8. Now we know there's no real crystal ball in the markets, but I like to view this as one that provides me a consistent market plan each day. I let the technology or the platform scan the markets, locate the setup, go to my platform, place the entry, and then manage the exit. And you can start doing so today with the 3S code package. So here's your special offer. It's a 3S code high-low indicator scanner for thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. Also going to get a chart pattern principle PDF manual and trading guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support, and access to our private Discord channel. We recently offered this online at these prices, $19.97, $14.97, and $9.97. But today, as part of this live webinar special, we're pleased to offer this as a one-time fee for $397. The offer link is seasonalswingtrader.com/code, seasonalswingtrader.com/code. I'll put that into the chat box. I see tons of questions here. I love the interest, but I'm going to get through all of this first, and then I'm going to get to everybody's questions. So let's talk about what the indicator and scanner includes again. You're going to get a visual plot of the 1, 2, 3 top and bottom reversal areas, entry, exit, stop, target levels, customizable settings, multiple look back periods. You can scan for setups only or trigger only. What does that mean? When we first had this built out, you could only see or only scan for setups, meaning those that were in the process of setting up, which is what I like to see. I had a couple guys write in and say, hey, this is great, but can you create the scanner to where it looks for triggers only, meaning that those that have already triggered? I said, well, went to my programmer, and he said it could. We had it built out. We didn't charge a single red cent. In fact, every enhancement we've made, we haven't charged a dime for, and you'll continue to get enhancements as we make them. But honestly, I don't know how much else we can do. All customizable pretty much. If you don't like the colors, you don't like lime green, you want puke green, you don't like red, you want hot magenta, you can change all that. The multiple look back periods, if you want to expand it out to find less trades, you can. If you want to dial it in tighter to find more, you can do that. You can look for intraday setups, day trading to swing setups, and look at multiple markets as well. Bonus one is a chart pattern principle trading manual guide, 90+ page PDF manual that you can download to your desktop if you choose to do so. Learn how to read charts, identify trend and range markets, other strategies, seasonal strategies, other high probability chart patterns, and more. Bonus two, 25 top option strategy guide, literally something for all account sizes. You're just learning to trade basic calls and puts to more intermediate advanced, such as condors, butterflies, verticals, diagonals, and more. Bonus three, access to our private Discord channel. So this is a channel we just started. In fact, we haven't even made an official announcement to our members. You're going to get access to this channel where we cover stocks, ETFs, indices, futures, commodities, Forex. we have channels within the channel where we're going to post intraday charts, intraday setups, swing setups, charts, analysis, more, and give you an opportunity to interact with other like-minded traders and investors such as yourself, where everybody can bounce ideas around on what's working for them, how they're using it, and so forth. Here's proof. These are unsolicited testimonials. They come in all the time. I don't ask for them. I'm very humbled and pleased that they come in. But most importantly, I'm happy that people are taking advantage and making profits with the 3S code. Here is an example of an alert that we sent out in one of our services using through the 3S code indicator. You see, we got trades in crude, unleaded gas, pound, euro, also natural gas. And I do eat what I cook. These are screenshots of my platform and TOS where I'm doing my equity and equity options trading, and my futures account where you see I got crude options, cotton options, copper options, yen options, nat gas options, even the S&P. And then here, finally, it's just one last final example here of a nice, clean, easy 2-point trade setup on the E-mini S&P. So the offer link is seasonalswingtrader.com/code. Hope everybody could see that in the chat window. Here's the offer once again. It's a one-time fee, seasonalswingtrader.com/code, $397. And let me look at your questions. I got a ton of them. Scroll back up, and then we're going to look at some markets today. We'll look at my favorite markets. We'll look at some of your symbols and see if we can get everybody taken care of. All right, so have I applied put credit spreads with a call purchase at the retest? I normally haven't traded those simultaneously, Craig. It's a good thought, good strategy. I'll either go with one or the other, is just initiate a put credit spread for a long or a call option purchase, depending on kind of the market environment, the volatility, or what my overall outlook is, if I have a bigger term picture, shorter term picture, and so forth. But that's certainly a good idea. Out of the box package is the use of Heikin-Ashi candles. I have not used Heikin-Ashi. I do know some people that do, but it works on Heikin-Ashi, Rinko. I just don't trade those chart styles, but it does. Yeah, it will work on any market, as we've already said, in any, whether it's a bar chart, candle, Heikin-Ashi, so on. Yeah, so Jag asks, can the scanner be set for only the futures? Yeah, you can. That depends on your platform, but you would add the instruments that you want to look at. That's exactly what I did. I created my own watch list. Here, I'll just scoot it over. This is my watch list right here, where I basically got future. This is my commodity watch list, but it's actually consists of futures and forex. I've taken out the markets that I don't care to look at. I'm not trading milk futures. I'm not trading lumber futures. I follow about 35 futures markets and about 35 FX markets, and then hundreds, if not thousands of equities and indices. Manuel, it is a one-time fee. It's $397. You own the indicator and scanner for life. I do want to tell you or share with you that this is kind of a secret announcement as well. Again, have not made any official announcements, but we had just completed the V1 version 1 or phase 1 of our back tester. So we built a back testers out in NinjaTrader, MT4, and Thinkorswim, and we're still tweaking the final aspects of that. But anybody that joins now, owns the code, will be grandfathered in at a very awesome charter launch rate, and we actually hope to do that this week. Again, this total truth, total honesty. We've been working on this for months, and we're pleased to finally release it, and we're very pleased with the results. As you would suspect, there are dozens, if not hundreds, if maybe not thousands, of different variables or parameters based on the back test, on how you adjust your settings, how you're managing your trade and your risk and all that. But just kind of black box, out of the box settings, we're very pleased with the results. and we're still continuing to go through those. But we'll look at the charts today. We'll look exactly at what happened today and look at your markets and symbols, and you can judge for yourself how things went. Okay, let me look at some more questions here. You're welcome. Let's see. Michael, the way we determine the profit objective is the distance between the 1 and the 2, and we'll go here shortly into some live. We'll look at here some live charts, and we'll kind of break it down. I'll show you the settings as well. Yeah, so of course, if you don't trade futures, you don't have to trade futures. You can trade, a lot of the futures have underlying ETFs, and there's actually something in the members area, ETF guides that are comparable. So, let's say that something sets up on, of course, the indices are very liquid. You can trade SPY, Qs, the diamonds, IWM, currencies. There's ETF for pretty much of the major currencies: FXA, FXB, FXC. A lot of the grain markets: corn, soybeans, wheat. Metals, of course, GLD, SLV, JJC for copper. Now, some of these get a little spotty, a little hairy, not very liquid. So that's just, make sure you're placing limit orders and watching those. Let me show you the members area briefly, and so you can kind of get an idea of what it looks like. Yes, we do, of course, offer support. You can see that right here, VIP email support. We're not going to leave you hanging out to dry. So here in the members area, here's all of your resources. You're going to see, how to trade the signals, how to customize, day trading, swing trading, so on and so forth. Here are some of these bonuses that we talked about, additional education. Here are your download material for Thinkorswim. So we've got videos and/or PDFs for a lot of these. So here in Thinkorswim, here's your video setup, PDF setup. Here's a little video on the seasonality widget in Thinkorswim. That's not a requirement, it's just another handy tool if you want to add seasonality to it. TradeStation, V95, V10, NT8, TradingView, and then MT4. And if you have any problems downloading, installing, we understand that. I'm not a tech wizard. Just email us and we're happy to support you. We've got a guy that will actually do a remote login to your computer if need be, and he'll even set it up for you. We don't charge anything for that, but it's pretty simple process. It should take about 5 minutes or so. You'll be up and running. Oh, awesome, Craig. Craig, hope you didn't mind me saying your name. I'll call you CB. He has it, and he had almost a double today. So that is good stuff. All right, guys, let's look at we'll look at some symbols here, and so you can kind of see it in action, live in the flesh. And the market volatility, that we've had recently, to me, you get asked all the time, well, does it work in this market environment? And the answer is yes, absolutely. And if it can work in any environment, in any time frame, any market, to me that shows the real validity of any system and our strategy. So here, do me a favor, can you guys see this chart here? Can you see it? This is a daily chart of the S&P. Robert, there's no renewal. There's no hidden auto renewal, no shenanigans. Can everybody see my chart of the S&P? All right. Yeah, I think we answered this earlier. Do trade options with it, but everybody's got different trade styles. So how you choose to trade, let's say even the S&P. So it looks like there's a lot of things going on here. based on maybe the charts in the PowerPoint. So what I've got here are two short-term moving averages, 5 and 21, and I use this as one of my filters. And you'll see that inside the members area right here. We talk about things to look at, how to trade. Mostly common sense approaches. That's what I feel is best. But these, I'm just sharing with you some things that I found work best for me. I do not trade every signal. I repeat, I do not trade every signal. And I'll quickly and happily show you some of the filters that I use to trade the signals and why. We'll take a look at the 5-minute chart in the S&P here, and I'll show you a couple trades that I passed on, a couple trades that I took. So daily chart of S&P, this is a really, really beautiful trade here. S&P down below the 200-day moving average. Of course, we've got huge range, huge volatility, huge risk. Also equals true reward. But notice that TP1 right here is at this 23.15 level. What is that? What level is that? Let me just scrunch the chart up. That level is the 2018 low. So I do not think that's coincidence. You're going to see more often than not that our take profit levels are at significant areas of price structure, which gives it even more validity. So got sidetracked. So we had the 5 and 21 short-term averages. The big purple line here is the 200-day. So I've got a rule in place for that. I do not trade directly into the 200-day. I do not buy directly in 200-day. I do not sell directly in 200-day. That's kind of a common sense approach, right? You know that there's going to be overhead resistance or overhead or support. Here we had a trend line break, broke above, got a couple of days of retest. 5 and 21 have crossed. 200 days all the way up here. So I'm not talking about, we're not trading right into it right here. I'll show you some examples from today where that was the case, but you can see there's some nice profit. Now we're starting to kind of roll over the last few days, but there's plenty of profits to be had. You've reached 50, 60, 70% of profit objective. All right, let's look at the 5-minute chart of the E-mini S&P today. All right, so here we are in a 5-minute chart of the E-mini S&P. A couple of things I like. I want to see the 5 and 21 have crossed, which they have. I like to see closes above the number 2 or the hook back above. Okay, so this is not a trade. This is not a trade right here because the 5 and 21s are spread apart, nor did we get any close above the number 2. Okay, now let's look at CL, 5-minute chart of crude oil. Poor crude. Look at the June contract today, traded all the way as low as what, $6.5. No trade here. 5 and 21s haven't crossed, no closes above. This technically ended up being a good trade, but by the time it triggered, it already went up to TP1. So I have no trade there, no trades in crude today. In fact, I keep a total running stats here on this doc of the E-mini S&P and crude oil every day. You see crude oil, I haven't had any trades for the last 4 or 5 days, but up about $2,800 per contract on just one contract in crude, about $8,100 per contract in E-mini S&P for April. Here is March. March is a bit of an anomaly here because of the volatility, huge volatility. You see we average probably around 25, anywhere from, I would say $1,700, $1,800 to $3,000 plus per contract in the S&P, and crudes anywhere, just depending on the setups, same thing, you got a couple $1,000 or so. All right, so ZB, the ZB on the 5-minute, let me go back up here. So today, again, depending on how you trade, I only see one trade set up, only see one trade. This trade, the 5 and 21s were crossing, but we basically reached TP1 before we got that extra confirmation. Here we have another setup. We have divergence, higher high, lower high on the RSI. 5 and 21s have crossed. We've come back down, hooked back down. You can get a couple retests. Hits TP1. Notice as hits TP1 reverses. Hits TP1 reverses. Happens all the time. Yeah, we could look at the pound on a 4-hour. Yes, it is, Dave. SP, I do like the 5 and 21 to cross. Yes. 4-hour. Okay, so the last trade setup we had was back here early March. Last 4-hour just on the 30-year. All right, so we're getting, cannot make new highs, hanging around, get some retests. It's TP1. TP1, what do you know, happens to be at a 200-day. Again, I talk about it all the time. It's like a magnet, and that's what that looks like. So we haven't had anything. Actually, just look at the pound, my bad. So here is the 6B, British pound futures. Could trade the pound US, cable US in Forex market. Could even trade FXB, the ETF. This is a textbook trade. 1, 2, 3. This number 1, higher RSI. See, we got the slope up, down slope on the price action. 5 and 21s have already crossed. We break above, hook back above. Hits TP1, goes sideways. We're in the middle of a 1, 2, 3 top. Breaks down below, gives a couple retests. 5 and 21s have crossed. Hadn't quite hit TP1. All depends on where you're taking profits. 6A we're also has triggered. We posted this in our Discord channel. Got a potential short here on the Aussie dollar, Australian dollar. We hadn't had a setup here since late March. Aussie, the 4-hour chart on the currency futures are amazing. Let's see where we are. All right. MGM. Let's see, MGM. So daily chart of MGM. So yes, we did have a 1, 2, 3. Notice that it hits TP1 to the tick. I mean, literally, I think to the tick, and then reversed. Facebook. Here we had 1, 2, 3, and here's an example of kind of trading down in that 200-day. Depends on where it is. Look, you can eliminate the average. You can eliminate the moving averages. This is just all about trying to put odds in my favor. There are hundreds of these every day, depending on what time frame you are looking at, what markets. Just too many markets to follow. Can't capture all of them. So I'm gonna take trades that where the odds are in my favor. So give me one moment here. And yeah, I don't day trade stocks. I'm just going to show you an example. I think it was on the 6E today, that this kind of a 200-day rule I use. Go back. Yeah, right there. Okay, so here's a perfect example. Like the 200-day is hovering right above the breakout level. So what I will do is, these are often good trades. All the criteria is pretty much met. All I need to do is see it close or break above the 200-day, and then a retest, and then it will usually take off. Delta Airlines, when we covered in our PowerPoint. So let me go back to the daily. All right, so here's another example. Because of the volatility, you're going to see a lot of these kind of similar setups on these stocks. A lot of 1, 2, 3 bottoms going on right now. The huge swoop down, retrace back up, and pull back down. So you're going to see a lot of these similar setups. But here the averages are too far spread apart for my liking. They're just too far spread apart for my liking. So I just would have passed on this trade. That's okay. And really at this time, going into the intraday low time frames has been worked really well. CS, which is soybeans. So we have a potential 1, 2, 3 bottom in the making, and go to trade SOYB, the ETF. If you want to track soybeans via the ETF, trading $13. Twitter. So good eye there. So we had a 1, 2, 3. But see how these averages are spread apart. Got earnings coming up too. I'll typically avoid trades going into earnings, but yeah, that's a valid 1, 2, 3 bottom. PFE just completed its 1, 2, 3 bottom price objective, which happens to be close to the 200-day. BA 1, 2, 3 bottom setup, also kind of have that triangle setup right there. I like that trade. We got earnings, and BA's been a little bit headline driven. We'll do this. We'll do that right there, and that's a good looking trade. But we've got earnings. T-Mobile. So this is interesting. You don't typically kind of see this crossover like this, but because we've had so much volatility, we actually had a high and a new low print, you know, in a very small range. It typically doesn't happen. But like, so here was the last 1, 2, 3 top, but right there, we can't get a good solid close. So we avoid the trade. The trend was up. Here's a 1, 2, 3. You know, we get a break and then it closes down here at the 200-day. If you're coming back and you're testing, you know, trend line resistance and testing that breakout level, that's where you can get short, keeping in mind you have a 200-day there. That's the way I look at that. And then on the flip side here, we have 1, 2, 3. The number 2 happened to be a break above the number 2, so that's where I'm looking to get long. How do you generate performance stats from TOS? We had a special strategy built out. There's no EA available, like EA, like robot or automated strategy in TOS, but we built the backtester component, and that's what's going to be included in that kind of charter launch for all owner members of the 3S code. It's very, very simple. Doesn't produce the prettiest reports. Ninja does really well. MT4 does, the program we built for MT4 does really well, but we'll work on a custom solution for TOS. Halliburton. There you go on Hal. There's our last 2 trade setups here. This short that hit TP1 and kind of fell off a cliff. And then 1, 2, 3. Little dicey, but I would consider taking it on the upswing. But you know, this is where just being aware of what's going on in the world, what's going on with energy, crude oil, energy markets. Luckily, Hal is only about 750, so it's not a high price stock. But if you already take a chance on it, you'd be looking for around 11.25. What time is 1900, Jack? On June crude? 5 minute, or do you have? So right now, basically, there's your 1900 time on June. Oh, I don't have 133 tick loaded. I have a 233 tick. Let's see. So we're kind of printing shorts, but like I said, I like to see the cross before we break down. But you can see there's been some pretty good trades here in the aftermarket. Right here, crossing right above the 200. Nice little trade there from what, 1290 up to 1370. Crude is hairy right now. The win-loss and risk-reward ratio all depends on the trader and how you're trading. You know, for these exact reasons that I've been talking about. We got people that are taking every setup. So once they see the 1, 2, 3, they're getting short. Some are using filters and parameters, such as the ones I've been talking about as well. Let's see the 521 crosses. I'm looking at divergence. I'm looking at some bigger picture stuff. You know, are we looking at bigger picture resistance and support? You can make it as simple or as complicated as you want. Another reason that we're coming out with the back tester is to answer questions such as yourself have, because it's an impossible question to answer because of all the settings. Do you want to have, you know, the minimum bars to be 1, 2, 3, 4, 5 bars apart from the 1 and 2? What from a percent level, from the distance between the 1 and 2, do you want to have be 1%, 2, 5, 10, to give you more or less opportunities? Everybody's going to have different results based on their own settings. Here's where you adjust all of your settings. This is toss, of course. Here's where you you know, change if you want arrow to a square, or, you know, different colors, things like that. That's how you'll do that. But as I said earlier, the risk reward, just out of the box, plain, if you keep it plain, simple, black and white, is the distance between the 1 and 2. So I know if I'm looking to get short here on breaks below the number 2, I don't like these tiny ranges. I mean, this is a 233 tick chart, granted, so you can get smaller ranges most of the time. But like over here, for instance, we have a wider range. I know that initially, just to allow time for the market to move or materialize, that I got a risk down here somewhere, just to let the trade trigger, get into some profit, try to scale out of some contracts, cover the cost of trading, and then see if I can get a runner up. Again, why that's another difficult question to answer, or not difficult, it's just impossible. So everybody's trading differently. You know, if we get up 50% of profit objective, are you moving your stop to the next area of support? Are you moving to break even? Are you taking some off? Or are you just not doing anything? Or are you waiting? You know, I front run the number, the target objectives sometimes, especially for like key levels. So for instance, I can see, you know, depending on how far I look back or what time frame, if say this is especially like a longer term time frame, and my TP1 is up here, and longer term I had weekly, daily resistance at these levels, you can rest assured that I may be scaling out a lot of contracts at these levels, or I'm going to be watching to see if we react for a potential reversal, you know, because there's just no need to sit there and reach 70, 80%, 90% of your profit objective and then have the market turn against you and you not do anything, not either take profits or not even move your stock break even. So that's what I'm just trying to make a point there about all the variables. Yeah. Divergence there. All right, folks. Well, that's basically what I have for you this evening, at least this evening here. I hope you found this informational. Maybe entertaining is not the appropriate word. Informational, at least, or educational, maybe I should say. I really, really enjoy this stuff. I live, breathe, and eat it every day, and even more so with our new Discord channel. I will tell you, in all honesty, not looking to create a trade room, a chat room. Get asked that all the time. Not interested in running a trading room or a chat room, but we are running, started this Discord channel that is going to be a community for all of us to only help each other. I mean, that's what it's all about. All help each other improve, extract profits from the markets. And I've gotten a lot of good feedback and enhancement ideas from students and members like yourself. So I see a lot of you typing in here that you're in, and I appreciate that. And I look forward to working with you and getting to know you. Yeah, you should receive a welcome email immediately or maybe a couple minutes after purchase. If you have any problems, let us know. Email address is support@seasonalswingtrader.com. Support@seasonalswingtrader.com. If you want to ask me any questions, when we're done here, if you think of something later on, just can't sleep, middle of the night, you want to ask me, shoot me a question, I may not answer, but send it to me and we'll get to it in the morning. You're very welcome, guys. Yes, this is a one-time fee. It's a one-time fee. Is it lifetime? Technically it is. I mean, you own it for life. You can download it, put it on your platform, your machine. You own it for life, and we'll support you for life as long as I'm around, as long as I'm supporting the product. But if you want to, you want to part ways and never talk to me again, that's fine too. I hope you don't do that, but you can download it, install it, and you can go do your own thing, or download, install it, and get involved in the community and send feedback, and we can banter back and forth. That's fine as well. But eventually I may not be around on this earth sometime, and if you send me a message, I may not get to that. But just kidding. But yeah, you own it. Yeah. There are, so for the alerts, that just depends on your platform and your settings. If your platform allows it, I get audible alerts and little pop-ups on TOS for pending setups. Like S&P on a 5-minute trigger or something, 1, 2, 3 bottom. I've got scans that are running in the background, and I get alerts when things have triggered. I'm watching some of it, but sometimes I'm not always watching. So those are helpful, but I don't send out physical alerts. Now, part of this Discord channel I've been talking about, hopefully that's where everybody in the community can start posting setups, because there are more setups than anybody could physically manage, across stocks, futures, Forex, options, tick chart, 1 minute, 5 minute, 15 minute, 30 minute, hourly, daily, 4 hour, so on and so forth. So that's where I'm hoping, where this really becomes a nice little community where everybody say, hey, check out this setup on XYZ, and that way everybody can help call out, potential trade ideas. So I've got a few beta testers in there right now, and we're looking at, talking about that short trade on the pound the other day, and so looking forward to that growing. Yeah, any updates that we include, assuming they're not just some type of drastic overhaul, will certainly be included. We've done that, probably made, I don't know, 5 or so updates or enhancements from the beginning. And we just send an alert out. We update the members area, and we send an alert out saying, hey, we've got new links, and there you go. And we're not going to charge you extra for that. All right, I want to let everybody wrap up and go enjoy the rest of your day. Forgot to say this in the beginning. I hope everybody is safe, both in the markets as well as physically and health-wise from this craziness we're in. So wherever you are in the world, hope you have a great rest of your day. Look forward to everybody that's joining. I like this crude setup right now, coming down to tag this 200-day, but we'll see what happens. But anybody, I hope you guys join, and remember, we're coming out that back tester, EA, more, always looking to improve, make things bigger, better, and better. And then we're really excited about this Discord channel. So We hope to have those links in the members area by tomorrow and send out official announcement. Look, we have not even told all current members yet about our Discord channel, so you're on the front lines. All right, guys, everybody take care. Have a good rest of your day, and I look forward to seeing you on the inside. seasonalswingtrader.com/code. Good luck, good trading, and we'll see you on the next update. Take care.